I just been getting, as you can imagine, so many questions in regards to like, what do we do now? We don't have flood insurance. Who do we call? What do you think our insurance will do for us? And
Yep.
obviously, I have no answers. I didn't sell them insurance. I sold them a home.
Yeah.
And like you were saying earlier, us realtors, we really should be, instead
Oh,
of
right.
offering
You have,
advice, we should just
you got to
send
be proactive.
to
You
you
got
guys.
to, yep. So first of all, let me start off by this, and I'll do for your viewers. My name is Robert Feldman. I'm an MGA, which is a managing general agent, who brings insurance companies and products into California. We just launched a new insurance product actually for all the high fire zones, which will probably be for a different one of your meetings.
Yes,
Um,
next.
we'll talk about flood primarily today, but anytime you'd have any questions on it, the fire ones are definitely an issue. So first and foremost, the best way to start probably this conversation is to talk about the insurance community in general. Okay.
Yeah.
Right now, those that are, unless you're under a rock, is the old joke. Right now, the insurance companies are basically leaving California in droves. There's multiple issues and multiple problems, which is very unique for in my 25 years of doing this is very unique. The reason why I say it's unique is usually you'll have a type of insurance having a problem, and the rest of the insurance types, like you have a problem with auto insurance, home, and all the other lines are okay, and you can then it balances itself while they fix the problem. Right now, in the insurance community, the insurance world is basically in chaos in almost every line of insurance. So not only is it flood, not only is it fire or homeowners insurance, but even auto insurance right now is shut down. Almost every carrier is pushing back. So
So
that's
let
kind
me,
of where to start with.
yeah. Well, so let me ask you then, what are like the typical types of home insurance that
Okay.
people get? Like
Yep.
what's the typical ones? And then we'll go from there.
Got it. Okay. So generally a consumer falls into a couple different categories. And it sounds super complicated, but it's really not. I always laugh
Break
when
it down for us.
yes, yeah, the insurance brokers try to make this seem a lot more complicated than it is. You have a primary residence. Pretty straightforward. That's where you live. You know, if
Right.
you don't have any other properties, a primary residence is what you bought with a great realtor such as yourself. And long story short, you're happy, you're living there, family, the whole nine yards. The next really couple categories are really what we get into are the other lines of property insurance. First and foremost is rentals.
Hmm.
You buy a rental property, and it's whether it's how the rentals work really comes into a couple different categories. One is a full-time rental. Those are still insurable in California.
Hmm.
And it's pretty straightforward. The ones that are having difficulties are the short-term
The
rentals. Or
STRs. Yeah, that question comes up a lot. What do I do? I want to have an
there's
STR
a
in Topanga. How do I insure it?
Yep. And the problem is the insurance companies have really gotten beat up by the short-term rentals. And the reason for it is there's no really way of vetting anybody that's coming into the property. And what's really scary is you'll see a lot of times with the VRBOs and the Airbnbs and all the different ones that they go, we have $1 million coverage. Okay. I always laugh about $1 million coverage.
Like, what does
Um,
that cover?
well, yeah, because it's supposed to cover liability or in case the person does you're renting to do something stupid. Well, here's the problem. What if you rented out something that costs $3 million to rebuild?
Right. Yeah.
Or because the insurance company is going to the primary insurance, the landlord insurance or home isn't going to cover an Airbnb unless it's
How do
specifically
they
covered.
how do they assess the risks? Like, say someone calls and says, I want to insure my investment property in Malibu. What are
Mm-hmm.
what how do they assess the risk for that particular property in terms
Got
of
it.
across
I,
the board?
let me finish one last thing because I mentioned the rental properties. Secondary residence is the only other category, and
Right.
that secondary residence has insurability, and then it has short term. It's kind of funny if you have a secondary residence and you rent it out less than 16 weeks a year, you can
Right.
find companies that do it. That's 4 months. That kind of finishes those three. But to your question with regard to how insurance companies look at it, this is the scary thing, and everyone needs to realize this. Every home every property in California, every residential property in California has what's called an insurance fire score. It is so important that with friends, we lobbied to actually have insurance companies start to include this in renewals. It was a bill that was passed. And why every consumer needs to know, I don't care if you're on Perfect Street or Gonna Burn Street, you need to know what your fire score is. First and foremost, that's how insurance companies look at risks.
What
If
about
it's
flood?
flood is
I mean, obviously
also,
there's flood zones.
yes,
And since
flood
we're going to
zones.
focus on flood with this particular
Mhm.
interview, so I understand flood zone. Obviously, if you're near a creek or
Yep,
near a river, it's
yep.
obvious that you might need flood insurance, right? The
Well,
100-year flood zone.
every home has a flood designation,
Right.
whether you're on the tip of a mountain or
Ah,
if
okay.
you're in the category. So when you, again, these are insurance scores. So you need to know what the insurance score is. And what's really important to back it up is what's called an elevation certificate. So if you've got a very bad score, because it's the fire scores are more precise than the National Flood Program scores are. So they'll
Mhm.
bundle you in the national flood scoring in a whole area. So you might
Right.
be 5 feet off the ground, built up properly, while everyone else is on ground level. Well, you're going to have if you get what's called an elevation certificate that's done by surveyors, they'll do an elevation, but generally that helps. We had a great example of this in Malibu sometime back, where the flood policy was $9,000. It was a very expensive flood policy, and we were able to. I personally went to look at it, and I went, God, you're built up high. I can't imagine why it's coming in this way. Well, the national flood, the codes for what they said it was at the worst code. We had an elevation certificate done by a surveyor, and
Like
it
a
went from
third party, like a
third
third
party.
party. Mhm.
It's actual a surveyor, a property surveyor. They're used to. You can look them up. You can find them anywhere online. It doesn't matter where you are in the United States. Actually, there's surveyors everywhere.
Yeah, yeah.
And what you do is they come out and they do specific cost for what's called an elevation certificate.
Right.
And this elevation cert took the policy from 9,000 to 900.
Okay. Worth the money.
It was worth it. Now, for everyone that happens that way, there are some that don't do as well, meaning
Right.
the survey comes in. So it's just really having someone knowledgeable in the forefront of being able to work with and deal with.
So now you mentioned National Flood program.
Programs.
So what about National Flood Insurance Program? Does that apply to us in Southern California?
Yes, everybody's eligible for the National Flood Program.
Is it just
There,
like California Fair Plan for flood?
yes, and what it really is it's a policy built actually a little different. California Fair Plan is a state-built insurance policy. It's a freestanding insurance policy. The flood program, believe it or not, is a national flood program. It's through the
Right.
federal government. So what was interesting is, just as a little side note, remember when we had the stalemate where the government shut down?
Yes.
Remember?
For
Okay,
90 days or something. Yeah.
or something like that. There were no flood certificate, no flood policies written during that time. That was one of the casualties because it was a national flood program.
And it's
That
like
program was shut down.
things you take for granted. And
Yep.
so, I mean, how common is it and how expensive is it to get one of those NFIP?
It just depends on the risk. It depends on that's why it's so very important to know the coding. It's because there are policies that are very inexpensive, and there are a few companies. There's a company that came to the market within the last couple of years that's trying to cherry pick against the National Flood Program, and they're doing a great job of doing
Sure.
it.
Yeah.
So the flood numbers, or it's my blank of the term, the flood evaluation for how they code them is really important, and because it makes a difference. And you can be different between 3 different houses.
For
You could have
sure. I
3
mean,
houses in a
especially with
row.
the topography in Topanga. I mean, the reason I
Yeah.
decided to do this interview is because obviously after the floods, I had so many calls from so many clients. You know, they've weathered well or they didn't, they needed recommendations. And of course, everybody's like, so now who do I call about my insurance? And that's why I was like, well, let me actually find out.
I
And
do so many of those unwindings. I get so many phone calls from great realtors. I'm constantly such as yourself, I'm constantly unwinding these problems. The
Yeah.
problem with is by definition, so when a consumer buys a home,
Mhm.
the mortgage company requires a homeowner's insurance policy. It doesn't require earthquake and it doesn't require flood.
Mhm.
Now, rising water from the outside, not a pipe break. A pipe break in the house is a homeowner's policy.
Right.
Rising water, like a backed up drain or something that causes an excess water, even a mudslide, is potentially the only place for potential coverage is under the National Flood Program. And I use the word potentially because it has to be declared as a national catastrophe, and there's all kinds of other things that have to fall in place in
Interesting.
order to be covered for coverage.
So it sounds like it's definitely recommended to look into that, especially with these type of weather events becoming a little bit more common.
I definitely agree. It's such a small percentage. I'm going to say this just full disclosure. Unless a mortgage company requires it, the percentages are so low that consumers have them.
Right.
Um,
Now I
and,
know, but
and it's
I feel
just
like they
crazy.
should.
Absolutely, especially when there's hillside properties.
Yeah.
In Topanga, as you mentioned, hillside
So
properties is, in my opinion, whether you're upslope or downslope. I mean, obviously, it's harder for water to go uphill, is the joke. But there's so many areas where I would say that would be up, and there's maximum limit. There's maximum coverages also. So, like the National Flood Program has a $250,000 maximum coverage. Now,
right.
there are excess policies that build on top of it,
Let's
which
talk about
can
that.
even.
What's the difference between private insurance in that realm and NFIP?
Well, private insurance, if it's in a preferred zone. See, what's interesting is if you're in a flood zone, if you're truly in a flood zone, you're not going to see the private companies be involved. They're just not going to. If you're not in the flood zone, then I think that's where you're going to see a lot more of the private companies coming into action, and they go into higher limits, and there's excess companies that come in. There's always, the best way of saying it, there's always a cost for insurance. It's not a question of getting insurance, it's more about the cost of it. And we do a lot of that right now where we're doing evaluations for clients. I work with a ton of business managers. I work with a ton of CPAs they all come to me
Assessing
asking
risk
about.
and cost, risk versus cost. I mean, they always say you can insure your pinky if you want. It's going to cost you,
Yeah,
Um,
exactly.
but so speaking of cost and like, let's just take something like a mudslide. I know it's really hard to cover it. Like, in the past, someone have told me that Lloyd's of London had landslide
Yep.
insurance. Are we
Yep.
still, do we still have that available to us?
Yes, depending on the risk, you can reach out, and we have clients that are constantly asking for that. You're gonna there's limitations to it, and there's a lot. I mean, it's a lot higher cost.
Of course.
So what I do as a general rule, I actually have a saying that I really kind of believe in. When I talk to consumers, I spin it a little bit differently. I'll go when I talk about insurance in general on the homes.
Mhm.
I joke around. So let's say you have a property and it's $2 million. I mean, obviously Topanga has a lot of homes that are a lot bigger than that, some that are smaller. Okay.
Mhm. Mhm.
And I look at a consumer that has a $2 million home, and especially when they own it, they've been there. Olga, how many times have you had a client that's been there for 30 years and 50 years that own them? Okay.
Yeah.
Where they own it outright. They just know you. What I look at a consumer and say, okay, let's change me for a second. I'm not an insurance broker anymore. I'm a stockbroker.
Right.
And instead of being the insurance person for you with a $2 million, because you own it free and clear,
Right.
I look and say, not 2 million in property, but I have $2 million of your stocks. And I came to you as your advisor and said, I've got a program where it's less than 1%, where you have no loss, and all you have is a gain. Are you interested? Well, what's
Yeah.
funny when I talk consumers, they're all day. Hey, 1% on my 2 million stock, I'm in. That's
Right.
$20,000.
And
I'm
you will
in.
never lose it.
You're not going to lose it. Well,
Right.
what's funny is then I go, well, you have this $2 million house. How are you not thinking the same way?
Right. It's an investment. It's growing. You got to
It's an
protect
investment.
it.
You
No.
got to. So that's where a lot of times I sit down with consumers and talk about it. And when it gets above 1%, then we start getting into, well, what's the value of things? I've always used 1% as a rule. for
That's
when
a
it
really
comes to,
good way of looking at it.
you know,
Yeah,
it's because in standard practices, if you were to invest in things, usually standard deviations are anywhere between 1 to 3%, you know, to offset loss. So I use 1%, which is the low end of it. 3% is the high end of it. But I mean, again, think about that for a second.
for
If
sure.
you, it
Makes
makes
total
complete
sense.
sense. Yep.
Complete sense.
Mhm.
Well, so back to flood policies, and we kind of touched upon this a little bit, but what are the common exceptions? Like, say you insured with a private, say you're not in the flood zone, say you're in Topanga on a hill, and you're worried that you have drainage that could potentially cause flooding in your home, and say you got a private insurance that covers you for X amount of dollars,
Yep.
what would be the exceptions?
Really not a lot of exceptions. I mean, what's interesting is the exceptions are generally other policies.
Hmm.
So meaning if a pipe breaks in your house and water is going everywhere, we
Yeah, that's
actually,
that.
believe it or not, you know, I've actually had a home in dealing with it, you know, dealing with for 25 years where they were gone and the washer and dryer was on the second floor and the pipe, you know, the hose blew and it went for 4 days.
Oof. Yeah, I've heard
Okay.
stories like that.
Out the front door, out the garage,
Until
every
the
direction
neighbors
until the neighbors
notify.
caught it. They called in, and what happened was it flooded their side yard, raised, wrecking the foundation. Now, I always joke around about flood being a bad word, meaning it's a 5-letter word that should be a 4-letter word. Water, that's a water damage situation. Okay. And so, but again, most of the exclusions per se are based on that. Now, typical flood programs have some internal coverages requirements. One, which is not hard to get to, are like our example of our really bad rainstorm. It was declared a catastrophe. The moment that's declared, what you can't have is people will say, well, what happens if my sprinklers break and it floods my house, rising water exterior? I go, that's probably a problem. It wasn't declared as a national catastrophe, as an example.
Would they
Okay.
be covered under your homeowners then?
Typically, no, because it's not interior. So
Mm-hmm.
every claim is different. So when I stress to consumers, when they say what's covered, and to your answer your question, it's a terrible answer, and I'm going to apologize. I get people say, well, what's covered and what's not? And I go, it depends. It really depends on the event. Because you can have an event, a given event, but there could be 5 different ways that that event occurred, and 4 of them are covered and 1 of them are not. So how can I tell
Yeah.
you that event's covered?
Yeah, and that's the tricky part with insurance, is that they don't
Yep.
typically want to cover something if they can, figure
I
out
think
that,
I think to be fair, I think that a lot of times has to do with representation.
okay, well, that's good to know.
And the
So
reason why I say
always
because I'm pretty good
representation
about,
matters.
yeah, because when I work with insurance companies, I'm generally working with my consumers. When there's a major loss, we're aggressively on the forefront of working with consumers to help with the insurance companies, and we work with the insurance companies to make sure we turn things around fast. Because a lot of times there's little tiny hiccups, and if you can get the right paperwork, the right thing in, it saves weeks or months. You
Yeah,
know,
well, I mean, that's really good to hear. Because honestly, you just don't know about the process. And maybe we can explain a little bit more about the process, like what
yep,
happens. So here's, you had flood insurance, you had water enter your home during this last event.
yep.
You call Bobby Feldman and you say, okay, what do I do? Where do I start?
Yeah. Well, I mean, the very first thing obviously is to file a claim.
Yeah.
To find out, and also what I recommend highly to all consumers is what is the damage? What is the damage? Did you have someone come out and get an estimate? One of the biggest things I tell consumers, I don't like ever letting the insurance company throw the first punch, is my joke. Meaning, I
Mhm.
like to make sure, because as a consumer, you're allowed to stop, you're required, actually, believe it or not, to stop further loss. So bringing somebody out, a contractor, to stop the continual damage is within your rights, first
Mhm.
and foremost. What you're not allowed to do is repair anything.
Oh,
So you
wow.
can't
Okay.
repair it. So you can, before the claim is filed, the claim adjusters by code, by law, have the right to adjust. So every so often I'll get a consumer that said I had a water damage claim and we stopped the pipe leak and I just went and fixed everything. Well, sorry, thank you. But the insurance companies are not going to cover it. They have no way of justifying whether it was an actual claim or anything at that point. I don't mean you want to use
Right.
fraud, but that's an example. But going back to it, you're required to stop further loss. My recommendation highly to consumers at that point is to have a contractor or somebody that's going to help do the mitigation. What is the cost?
Estimate.
Is estimate? Is it $1,000? Is it $1,000,000? What is it? Because deductibles are applying at that point, especially when you have excess flood, as an example. You might have a 10,000 or 20,000 or $50,000 deductible on some of the programs that are going all the way up. Flood doesn't generally have that high up deductibles. You really need to know what the damage is.
Right.
What you,
Here's a question, and it's a little bit off center, but say in the event, ooh, what happened?
you for some,
Lost you for a second.
someone tried to call in, so I had to kind of
Oh,
knock it
sorry.
down. It's all
So
right.
yeah, here's a scenario. So say
Yep.
someone had a landslide occur on their property that was caused by a failed county road. And it was basically the rains caused damage to the county road, undermined the hill, and therefore this property suffered a lot of damage. So they, if say they have homeowners insurance, but say they don't have necessarily Lloyd's of London covering their slide, but obviously there is a responsible party for the failure of the road.
That's going to be an attorney question. I would jokingly say, Olga. I would at that point probably look at the consumers and name. I can name one of the ones I love is a gentleman named Don Lanston from Manfredi Levine. Mark Carlson's also a great one. It's a real estate attorneys. These are real estate attorneys that would help with that. Because when you get into a lot of gray, that's going to be kind of where you're going to need to go as a consumer,
For
especially
sure.
when there's major damage.
Yeah, no, that's kind of.
I'm sorry to kick that. I'm sorry to kick that one sideways because
No,
that's
I
one of
totally
those ones
understand.
when you're
That's
involved in a
getting
30, when you're involved in a third party, when you're involved in a third party, now we're getting into the technical things. When it's your hillside and it's your property, that's a lot more of a straight up situation. But when there's a cause effect, that's going to be it's going to be, I would jokingly say, above my pay grade. Is the
Got
joke.
it.
That would
Is
be
there such thing as like a forensic insurance adjuster who could come out and determine the cost?
There are what's called public adjusters, but you're hiring them and paying them based on a fee.
Yeah.
Personally, I think in some situations that makes sense. In most situations, I don't agree with. The reason for it is again, this goes back to if you have somebody who's actively working on your behalf with the insurance company,
then it's not
as a general rule, it's not necessary. Now, the public adjusters will always argue that they'll get more from the insurance company. And I'm going, well, a repair is a repair is a repair. So if it's $100,000 in damage, it's $100,000 in damage, kind of a thing. So, I mean, there's two sides of that coin. I'm sure if a public adjuster was on here right now, they would be arguing with me why they're 100 times better than me. I kind of smile about that all the time. So.
Got it. Well, I think this has been great because these are a lot of questions that I'm getting and you pretty much answered all of them. So as far as flood goes, I think we covered it. I don't know if you have any other kind of like suggestions that I might pass on to
really,
buyers and sellers.
I think it's so crazy right now, Olga, and I say this all the time, is really a couple things. One, I really have a problem with when it's people don't look at their policies. And there's all kinds of problems. I can guarantee you, if I went through your MLS report for all the people you represented, and let's say we held a seminar and we did insurance, and the requirement before they walked in the door was to bring their policies with them. I'll guarantee you 9 out of 10 have problems.
Yeah.
And they don't know it.
Number one, get your policy out, look through it, call your broker, insurance broker, get them on the phone and get them to explain what you're covered for and what you're not covered for. And then ask them, maybe I can get an NFIP.
And what happens is, and Olga, I'm sorry to say this, consumers up across the board right now, people are getting price increases, and it's tough. The problem is that it's not easy for a consumer to say, okay, I'm insured. I mean, because you can build in Topanga for 200 a square foot, right, Olga? That was a joke, by the way, when I said 200.
I was like, wait, what? We're not at 94.
Yeah. Well, I'm joking around with you. And what happens is I just saw one in Topanga the other day. It was just over 200 a square foot. And I looked up and went, you can't build. And what happened was the policy was written probably with the California Fair Plan. It was written probably 20 years ago.
Right.
you know, kind of a thing.
So
When it was
update
2
your
to 3 square
policy.
foot,
So that's the moral
there
of
is
the
no
story.
coverage. Oh, absolutely. And knowing and being proactive instead of reactive. Reactive in my comment, and I'm sorry to, now that's where I'll pick on a little bit of the consumer side. So sorry, everybody, I'll pick on you for a second. You know, most consumers don't want to raise their coverages. They don't want to raise their costs. And in a market that's rising, it's dangerous because, I mean, there's a lot of issues. There's whether it's flood or different ones. If you're not insured properly, you could be out millions of dollars, and it's there's no, hey, I didn't want it this way. It's, you have to know. You can't, no one's got that crystal ball, right? That crystal ball we can look up and say, I'm going to have water coming in my house in 3 weeks. I better get a flood policy.
Right. Well, but we can
it's being,
be acting, you know, proactively because we know that things like that happen in our neighborhood. So, well, thank
got
you.
it.
You probably will be getting a
You're
lot of
welcome.
phone calls after this
Yep. And let me
interview.
just think some information to make it a bit easier for you also, Olga. My name is Robert Feldman again. The best way to contact me is my email is robert@wows, WOWS insurance.com.
I'm
Probably the
going to
best way you
share
can
it
email
in
me.
the video.
Share it with everybody. And what we can do is we're always around to help. We're again an MGA, so we bring in insurance companies into California, which is kind of unique. And we are on the forefront of a lot of different lines. Obviously, flood being one of them, fire being primarily.
Yeah, and we'll do another episode on that too. I mean, that's
That one,
always top of
I
mind.
would say you got to, because there's some really scary things about the FAIR plan, and we've got some exciting news. We launched a new insurance product on the fire side, so
That's
stay
right.
tuned for the next one. Okay.
All right. Thank you so much. I really appreciate it. Always
You're
good
welcome.
to see you.
Always good to see you. Talk to you soon.
Bye.